Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. Today's analysis focuses on a development in the foreign exchange market that may appear to be centered on Vietnam, but it carries broader implications for global currency markets and for those following the Iraqi dinar. The US dollar strengthened against the Vietnamese dong in both official and unofficial trading channels, while the dollar index also moved higher against major global currencies, including the euro and the Japanese yen. This move was driven by renewed geopolitical tensions in the Middle East, rising oil prices, and growing expectations that the US Federal Reserve could maintain a tighter monetary policy stance for longer. According to the latest market data, the dollar was sold around VND 26,420 on Vietnam's black market, while Vietcombank kept its official rate unchanged near VND 26,510. At the same time, the dollar index climbed to 101.47. The euro weakened against the dollar and the US currency reached a fresh multi-decade high against the Japanese yen. These moves are significant because they show that investors are once again seeking the relative safety and stability of the US dollar during a period of heightened uncertainty. For Iraqi dinar followers, the most important question is not what is happening to the Vietnamese dong specifically, but what the stronger dollar environment means for Iraq's currency management, inflation outlook, oil revenues, and broader economic reform efforts. To understand the connection, it is important to remember that the Iraqi dinar is managed by the Central Bank of Iraq, rather than freely floating in global currency markets. The CBI uses foreign exchange reserves and policy tools to maintain exchange rate stability. When the US dollar strengthens globally, many emerging market currencies come under pressure. Countries that rely heavily on imports often face higher costs for goods priced in dollars, including energy products, industrial equipment, food commodities, and technology imports. Vietnam's experience provides a useful example. The Vietnamese dong weakened against the dollar as global investors reassessed interest rate expectations and geopolitical risks. Iraq operates under a different exchange rate regime, but it is not completely isolated from these global forces. A stronger dollar can affect regional trade flow, boost import pricing, and the cost of dollar-denominated transactions across the Middle East. One of the key drivers behind the recent dollar rally has been the rise in oil prices following renewed hostilities involving Iran and concerns about supply disruptions. This creates a mixed but important dynamic for Iraq. On one hand, higher oil prices generally increase Iraq's export revenues, because crude oil is sold in US dollars. That can improve government finances, support foreign exchange reserves, and strengthen the CBI's ability to maintain exchange rate stability. On the other hand, higher global energy prices can also contribute to broader inflationary pressures. If transportation costs, imported goods, and industrial inputs become more expensive, Iraqi consumers and businesses may face higher prices. The central bank must therefore balance the benefits of stronger oil revenue against the risks of imported inflation. The article also highlights an important factor influencing global currency markets: expectations regarding US Federal Reserve interest rates. Investors increasingly believe that the Fed may keep rates elevated or potentially tighten policy further if inflation risks increase. Higher US interest rates tend to attract capital into dollar-denominated assets, because investors can earn relatively higher returns in the United States. For countries like Iraq, this matters because global liquidity conditions become tighter. Access to international financing can become more expensive, and emerging markets may experience increased pressure on their currencies. Iraq's substantial foreign exchange reserves provide an important buffer, but global monetary conditions still influence investor sentiment and regional financial flows. In the short term, the stronger dollar environment is likely to reinforce the Central Bank of Iraq's cautious approach. The CBI has consistently emphasized exchange rate stability, banking sector reform, and improved compliance with international financial standards. A volatile global currency environment generally encourages central banks to prioritize stability over aggressive policy changes. For Iraqi dinar followers, this means that external conditions currently favor prudent management rather than sudden currency adjustments. The CBI's focus remains on strengthening the banking system, improving electronic payment infrastructure, reducing reliance on cash transactions, and enhancing transparency in foreign exchange operations. Another important aspect of this story is the relationship between geopolitics and currency markets. The report notes that renewed tensions involving Iran contributed to the reversal in oil prices and increased inflation concerns. Iraq sits in a strategically important region, and regional developments often affect investor perceptions of risk. However, it is important to distinguish between short-term market reactions and long-term economic fundamentals. Currency markets can move rapidly based on headlines, but sustainable changes in a country's exchange rate framework typically depend on broader factors such as fiscal policy, foreign reserves, economic diversification, banking sector health, and institutional reform. Iraq's long-term economic trajectory will be influenced by several ongoing initiatives, including modernization of the banking sector, digital payment expansion, anti-money laundering compliance, infrastructure investment, and efforts to attract foreign investment. These structural reforms are generally more important for the future of the dinar than day-to-day fluctuations in global currency markets. That said, the current global environment does provide some advantages for Iraq. Because oil is priced in dollars, a stronger dollar combined with elevated oil prices can increase the dinar value of government revenues when converted through the official exchange rate system. This can support public spending, investment projects, and reserve accumulation if managed effectively. The challenge is ensuring that increased oil income translates into broader economic development rather than temporary fiscal relief. Economists have long argued that Iraq's long-term currency strength depends on reducing dependence on oil alone and expanding productive sectors such as manufacturing, agriculture, logistics, and services. For viewers who also follow the Vietnamese dong, there is an interesting comparison. Vietnam has developed a diversified export-oriented economy, while Iraq remains heavily dependent on energy exports. As a result, the two currencies respond differently to global shocks. The dong is more sensitive to trade competitiveness and capital flows, while the dinar is more closely linked to oil revenue and central bank reserve management. The recent rise in the dollar index also deserves attention. A reading of 101.47 indicates broad-based dollar strength against a basket of major currencies. When the dollar strengthens against the euro and the yen simultaneously, it suggests that the move is not merely a bilateral currency fluctuation, but part of a wider global trend. For Iraqi policymakers, broad dollar strength can have several implications. Import costs may rise, regional currencies may weaken, and cross-border trade settlement patterns may shift. These factors reinforce the importance of maintaining adequate foreign reserves and ensuring that the banking system can efficiently process international transactions. In recent years, the Central Bank of Iraq has placed increasing emphasis on integrating Iraqi banks with international financial standards. A stronger global dollar environment makes this work even more important because efficient access to the international financial system can help reduce transaction costs and improve currency market stability. It is also worth noting that the article describes the US economy as relatively more insulated from energy price shocks than Europe and Japan. This perception has supported the dollar. If investors continue to view the United States as a comparatively resilient economy, the dollar could remain firm even if global growth slows. For Iraq, this means that external monetary conditions may remain challenging for some time. A persistently strong dollar can create pressure on many emerging market economies, but Iraq's oil exporting status provides a partial offset through higher dollar-denominated revenue. Looking at the short-term outlook, Iraqi dinar followers should watch three key indicators. First, global oil prices, because they directly affect Iraq's export income. Second, US Federal Reserve policy signals, because they influence the strength of the dollar and global liquidity conditions. Third, Central Bank of Iraq, reserve levels and foreign exchange management, because they remain central to exchange rate stability. If oil prices remain elevated while the CBI continues to manage reserves effectively, Iraq may be able to maintain a relatively stable exchange rate environment, despite broader dollar strength. If global inflation pressures intensify significantly, the CBI may need to remain particularly vigilant regarding import costs and domestic price stability. From a longer-term perspective, the current environment underscores why Iraq has been pursuing banking modernization and financial sector reforms. A more integrated, transparent, and efficient financial system is better equipped to handle periods of global currency volatility. Investors and international institutions generally place greater confidence in economies with strong financial governance and clear monetary policy frameworks. For those who are specifically interested in the possibility of future changes to Iraq's currency framework, it is important to focus on official policy developments rather than short-term market rumors. Meaningful changes in exchange rate policy would typically be accompanied by broader economic planning, fiscal coordination, and clear communication from Iraqi authorities. The recent movement in the Vietnamese dong should therefore be viewed primarily as a signal of renewed global dollar strength, rather than a direct predictor of Iraqi dinar policy. The more relevant takeaway is that geopolitical tensions, oil prices, and U.S. interest rate expectations remain major drivers of international currency markets. In practical terms, a stronger dollar tends to increase caution among central banks worldwide. For Iraq, that likely means continued emphasis on reserve protection, exchange rate stability, banking reform, and inflation management. These are all areas that Iraqi authorities have repeatedly identified as priorities. Another point worth emphasizing is that currency strength alone does not determine economic success. Sustainable economic progress depends on productivity, investment, infrastructure, governance, and private sector development. Iraq's ongoing reforms in banking, payments, customs modernization, and investment regulation are likely to have a greater long-term impact on economic performance than temporary fluctuations in the dollar index. For Iraqi dinar followers seeking a balanced assessment, today's news suggests that external conditions have become somewhat more supportive of the US dollar and somewhat more challenging for emerging market currencies in general. However, Iraq's position as a major oil exporter provides an important source of resilience that many other emerging economies do not possess. The key question over the coming months will be whether higher oil revenues can be effectively converted into stronger economic fundamentals through continued reform, investment, and financial modernization. If Iraq succeeds in strengthening its banking sector, improving investor confidence, and diversifying its economy, the long-term outlook for monetary stability could improve regardless of short-term fluctuations in global currency markets. For now, the most reasonable interpretation is that the stronger dollar environment reinforces the importance of cautious and disciplined monetary management. It does not automatically imply a major change in Iraq's exchange rate policy, but it does highlight the interconnected nature of global financial markets and the need for continued economic reform. Thank you for watching today's Iraqi dinar analysis. If you value responsible, factual, and balanced coverage of Iraqi economic developments, make sure to subscribe to the channel and stay updated with future reports. This content is provided for informational and educational purposes only and should not be considered financial, investment, or trading advice.